Hey, everybody. Thanks for tuning in for Technical Tuesdays on the Futures Radio Show blog. Remember, I post Technical Tuesdays on the first Tuesday of every month exclusively on my YouTube channel. So be sure to subscribe to my YouTube channel for updates. In this interview, I spoke with my friend Jeff Davis. Quick background on Jeff. Jeff has been a full-time trader since 2000. He started off as a prop trader at Bright Trading, and for the past 13 years, Jeff has been an independent E-mini S&P trader. Now, in this post, Jeff and I discussed his process for choosing the right indicators and strategy for him. He tells us how and why he ended up creating his own indicator. Jeff tells us why he only keeps up Bollinger Bands and moving averages on his charts. And more importantly, he tells us how he uses Bollinger Bands and moving averages in his execution. Lastly, he explains why he uses a systematic approach for trade indications, a discretionary process for entry execution, and quantified targets for his exits. Now, before I send you to the interview with Jeff, I want to mention the technical analysis guide done by RJO Futures. I have it downloaded on my desktop, and it's a great free resource for the basics of technical analysis. So if you're interested in learning more about technical analysis, or if you're a veteran like me that likes to have a resource for the basics of technical analysis, I highly recommend you download this free PDF located in the post on our website. So without further ado, let me take you to the interview with Jeff. So Jeff, how did you learn about technical analysis?
Mainly books, and then just, conversations with other traders. And, through time, you start to pick up and realize how to look at it properly. Like what overbought and oversold actually means, and how oscillators work. And, moving averages are pretty simple. But over time, experience, you just start to pick it up and understand these technical tools better.
About how long of a time frame did it take for you to really kind of figure out technical analysis? And then talk to us a little bit about the process you went through in choosing your technical tools and strategy.
Well, Anthony, I think that's one where you start out, and the technical analysis is not that hard, depending on how you're looking at it. And you pick it up, and you think you just found, the greatest thing since sliced bread. And then after a while, you start to realize that you really have to understand, what these things are saying in different contexts and that. And then it's like, okay, start taking stuff away because it's easy to pick up a wide base of indicators and that. And then it's like, okay, start to back out of them and, figure out what's only useful for that context that you're in.
Talk to us about that process. How did you start eliminating them? And then talk to us about the ones that you chose to keep and why you chose to keep them.
I eliminated most everything. I still keep a couple moving average that I'll look at here and there, and it's, mainly just for trend direction. And I'll still use some sort of Bollinger Bands that just contain a large portion of the price action. And that's where they guide me. I'm not looking, I use them to time a trend too, which is a little different, using Bollinger Bands to time trends. So that's it, pretty much Bollinger Bands and moving average just for, visual trend confirmation kind of.
Talk to us about how you are using the technical tools that you still have on your machine right now.
Okay, well, the Bollinger Bands I use a lot, not for, they're not used at all for triggering trades or anything, but I use them to evaluate risk. The bands that I'll use on my, let's say, a 1 minute chart are there, and I know that they'll contain approximately 98% of the price action during the day. So I can use them as a good spot to relegate risk against, understanding that 98% of the time price is going to stay within them, and when price gets to that band, I have a little decision time. Yes, once in a while price will slam through, but that's the 2%. So that's it. So I'll use them a lot for that. And then I also use them, like I said, to measure, time and trend also.
What time frame are you trading on, and what chart times or tick charts are you looking at on a regular basis?
I look at a 1 minute and an hourly, but I trade off of, proprietary indicator, my own indicator that I built. But while I'm watching the market in that, it's a 1 minute. on the SPY or the ES.
And you choose the 1 minute because you're day trading, right? Are you scalping or are you just trading one position throughout the day?
Intraday trend trader is more what I like to say about myself. Some days you're just scalping. That's all the market's given. Other days I'm getting in, I'm scaling, and I'm trying to hold on for a good portion of that trend, looking for quantified targets.
So you mentioned that you created your own indicator. Obviously, at the beginning, you didn't know that that's what you were going to do. Talk to us about why you decided to create your own indicator.
It was actually by mistake. It was just, I was trying to create a tool to help day traders stay on the right side of the market, not be fighting the market. So make it easy for somebody, looking over the shoulder to come by and say, why are you shorting that stock when, this indicator, it's all green here. So it was, looking at buying pressure and selling pressure. And I settled on that. And then after I got it built, and I had it looking at a lot of stocks at the same time, I started to see some ideas and started to pop into my head and seeing some things that just said this could be used for more than that idea. And that was it. That was the beginning of it. Then refined it a little bit and been using it now for 7 years or so.
I know you primarily trade the E-mini S&P. Why did you choose that market?
In the hedge fund world, if you're going to do anything, if you want to go in that world or, money management or anything like that, you want to get in something where it's going to matter if it's scalable. And the ES is where, you can scale. There's plenty of movement in it, and you can scale. So in order to give yourself a raise, you can just worry about size. You don't have to worry about finding different trades or more trades.
So you've been through this, Jeff. You looked at all these different types of indicators. You've now created your own indicator. You've created your own strategy. What's the advice that you would give a new trader or even a trader that's out there right now who's been trading for a few years, who maybe still hasn't found the technical tools or strategy that they are really comfortable with? What is the process that they should go through to finally find the strategy that works for them? Because I think that you and I will both agree this is a very personal business and there's no right answer for anyone. So it's very personal. That's why I'm wondering what your advice would be to someone out there that's still searching for their technical tools or strategy.
Start to settle on something that makes sense to you and then stick with it and get better at it. And the getting better part is mainly just applying context. Whenever you're using some sort of technical analysis, it works very well under one context, and it's going to work not as well in another context. And I believe that's your whole job, is to define and understand the context where it works well and get in there and do your business. And when it doesn't work so well, figure out how you're going to handle that. And that's it. But so many new traders, they just jump and jump and jump from one thing to another, and just then they wonder why they don't get anywhere. Settle on something that makes sense and then get better at it. Put the time in.
I agree. I made that mistake, and I'm sure you did, as I went from every different type of indicator out there because I felt it was my indicator that was wrong. Over time, I settled in with a very simple indicator as well. I, like you, created my own indicator, but use some basic indicators out there too. And a lot of what you and I, we know each other pretty well. We talk about how important execution is. Talk to us a little bit about your execution. Talk to us about what process you go through. Let's start with an entry.
I get a signal, and then once I get the signal, I know I have to get some sort of exposure, and then it's kind of almost going down my checklist of the tools I use and trying to come up with an idea of what exposure I should get. And that's it. I try not to ignore signals. I want to take them. Selling pressure is rising. Selling pressure is rolling over. I got a long signal here. Look at the other stuff to apply some context to, where the signal's coming from and under what conditions, and get exposure. And it's to determine what size exposure.
So you say you get a signal. Is that signal automated, or is that by you going through a checklist of things and then saying, okay, I'm ready to get in?
Yeah, no, it's an indicator based. The indicator just does a certain thing. pretty much rolls over or bounces up, and depending on which one I'm looking at. And that's, it's quantified, the amount it has to do that. And then once it does that, it's like, okay, got to get exposure.
Yeah, I do something similar. I have my indicator give me an automated signal that notifies me that, okay, look at the setup you were looking for is now here. So I use new technology in that form to help me. It keeps me from over trading. Does that work the same for you? And do you recommend that traders out there, once they find an indicator that they like, that they do use automation?
I think your goal should be that you're eventually going to use automation, because that really makes you understand what you're working with and get rid of all the gray, as that's, can kind of stay in the system if you're totally discretionary. When you start to define, well, what is the actual signal? What's going to trigger it? You have to get rid of stuff. Everything has to be true, false, black and white, yes and no. And I think that is a great process. And even if you're never going to automate, just going through the process to say, I want to automate, that's a good thing for a trader.
So you and I are very similar in this manner. We use automation for signals, but we are discretionary in entry. That's correct, right?
Yes.
So once you get your signal, talk to me about that a little bit. How are you determining stops and contract size? Are you using the same distance stop every time? Does it change? Are you using the same contract size every time? Are you scaling in? How does that all work?
That's where the bands will come in. And I mainly use 3 sizes. So I'm either full size, 2/3 size, or 1/3 size. 1/3 size enables me to have a really wide stop for the conditions. 2/3 is a little bit smaller, but I can still scale off of that and hold some. And if I'm full size, of course, I scale everything. I don't try to hold anything for the full amount. I'm always looking to scale and get myself in a position where I can hold on to the second piece and hopefully manage it better. Reason being, for the scale, once you get that little piece in your pocket, you shouldn't have as much emotion involved anymore, because you're pretty much guaranteed yourself a small loss as long as you don't get stubborn, and that's the best you can hope for. And once you get guaranteed that small loss, you should start to be able to make better decisions without living and dying on every tick. And then I can let my quantified targets kind of play out. It's easier to breathe.
So is your stop always the same distance?
No.
And also, talk to us a little bit about your position sizing. When you talk about scaling in, are you always scaling in the same number, or does that number vary based upon maybe how far your stop is?
No, on the entry, I'll decide and execute on my position size right there. And then I'll scale off of that if it moves into my favor some. If I'm at a size where I don't scale, then I'm just holding for a longer duration. Stop will be a little wider. Stops are not always the same. That's where I'll use the liquidity and the bands. Those Bollinger Bands I spoke about, my stop will be somewhere below them. I know the market has to breathe. It's moving up and down. So I'm not living and dying on every kick, and I'm not a big fan of any certain level. So I use those bands heavily then.
Talk to us about exits, because I get the real sense that you have this automation for entries, and you talk to us about how you're using some other indicators to help you determine, how big you're going to trade on that entry. But exits, what are you using to determine profit targets?
Mainly quantified stuff that I've done, studies that I've done that are quantified targets for, within the context of that entry. And I use those heavily, and the only thing that'll take me off of those most of the time is time in trend. If we start to get long in the tooth and they're not reaching my target, and also if the selling pressure starts to pick back up and reach a certain level, then that can trigger an exit also. Exits are pretty much not discretionary. I let the selling pressure guide me, or get to the target as long as the selling pressure is staying lower.
Systematic when it comes to your indicator, discretionary when it comes to your position sizing, quantified targets. The only thing that gets you away from them is time and trend. And you said if the selling pressure increases. Do you have multiple targets? Are you ever trailing stops? Talk to us about how that works.
Nope. Usually one initial target, and it's not always set in stone because I use range a lot. So I have built a tool that helps me give projected range, and as long as everything is still within bounds on what that is said, I'm giving it a chance. And time of day, Anthony, you're a day trader. Time of day matters a lot. And, when I enter is going to matter how long I'm looking to hold in that. I enter early in the morning, I get a good spot near the low in that. You got to come and get me out of it, most likely. Something's got to really crop up. It's 2:30, 3 o'clock in the afternoon, though, and I make an entry on the long side. I'm going to be more scalpy. There's not a lot of time in the day. So, you're going to book your profits then. So targets are a little different. So all my targets, even though they're all quantified, they change by the time of day that the entry was made.
What happens if there's a data point coming up? I mean, this is Fed week. What if you're in a position that's your way and there's an FOMC statement coming out? Are you just covering? Are you moving your stop up? What are you doing?
No, I'm out before that. I'm not in. I don't gamble on news. Let the news play out, and then I'll get in and take a signal. So I'm always flat before a Fed meeting. Anything that I know is I call that podium risk. Anything I know where somebody's stepping up to the podium, some sort of announcement or something, and there's a defined time, I'm flat.
Now, Jeff, you've been in this industry a long time. You've been a trader for a long time, a successful trader. You and I, we both had some really bad losses. And when you look back at your career, what I'd like to know is, how did you handle bad losses early in your career? And talk to us about how you handle them now.
Pretty much early in my career, there was lots more bad losses. And then it would be just try to take one step at a time. Don't try to make it all up. That's the worst thing you can do. It's come in and just grind away, get a good trade, even if it's small, get a winner, get your confidence back, and then just keep doing what got you up there in the first place. Because it's usually an error in judgment or something that gets you to take the big loss. Usually you got stubborn. You were having things telling you shouldn't be out, you should be out of the position, and you ignored them for whatever reason. Stubbornness came in. And then as you get more and more in this business, the one thing I've tried to do each year over the last 6-7 years is avoid battles. And when I avoid battles, I tend to avoid getting stubborn. I don't really have no emotional attachment. And when you get involved in things that is kind of a battle in the futures market or the stock market, then that's when you tend to get more emotional, and that's when you'll tend to get more stubborn. Because you want to be right, you want to, you put a lot of yourself in, you're a lot of invested into it. To me, I want to keep it as this is just a signal. Here's my stop, here's my scale, here's my target, let it play out, on to the next.
Last thought for today, Jeff. You explained to us your strategy. We talked about your process for execution. What is it about your strategy that you believe gives you an edge?
It's just a simple thesis that it takes selling pressure for prices to go down, and when selling pressure is lightening up, it's maybe an opportunity to get long.
So it's as simple as that. I'm curious, do you believe that your discretionary execution is an edge, or do you attest all of your edge within your systematic approach with your strategy and your quantified targets?
Geez. Well, I don't care if you have an edge or not. If you don't execute it, it doesn't pay. So you have to learn to execute. And then off of that, you're going to know if you have edge. The P&L is going to show it, at the end of the month. That's what it comes down to. So in this game, everything is about execution, as you know, Anthony. You can have a lot of right ideas, but if you're not in there and don't get into position, then it doesn't pay anything. So you're always struggling with execution, right? We can always be better, but you're never going to be perfect. And that's it. That's the goal. Just keep getting a little better.
Thanks for tuning in for Technical Tuesdays. Remember, if you're interested in learning more about the basics of technical analysis, or a veteran like myself who likes to have a basic technical analysis guide for referencing, please download the free technical analysis guide on our website under this Technical Tuesday post. Cheers, everybody.